People need an income that's guaranteed to them.
If you lose money to taxes, you're never getting that money back.
You need to get serious about adding some lower risk.
Greed. I don't like greed.
The thing to be afraid of, honestly, is the thing that we're not thinking of, the black swan event.
There's a tsunami coming. Bye.
Welcome to Retirement Coffee Talk with Charisse Rivers.
Just coffee talk.
There's a lot of noise, a lot of chatter. Who do you listen to? Who do you not listen to? You have to stay focused.
A fun and informative look at the issues of wealth, retirement, and protecting your life savings.
These advisors out there that were trained to sell, and have all these fees. They don't want to talk about this product, so they make less money.
And now, Retirement Coffee Talk with Charisse Rivers.
Welcome once again to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com, ZINNIA wealth.com. What is it that this show is all about? Well, there's going to come a time, maybe it's this year, that you are going to retire, or you're getting closer anyway, and you want to know, how is it all going to work when I get into retirement? All these years, I've been getting a paycheck from my employer. Now it's all on me, and we are the show that talks about when it gets to be all on you, because it really shouldn't. You should have a partner in this, and that's why we introduce you to Charisse Rivers. Charisse, how are you today?
Oh, I'm great, and I've started my New Year's resolutions, and guess what? I haven't messed them up yet.
Okay, well, we're only a couple of days in here. Okay, all right.
No,
so are you
well,
taking?
You told me like people's New Year's resolutions last an average of 7 days, and then it goes down to 10, and then 15, and then it's totally ruined after that.
By the end of the month, we're pretty much all out of it. But have you taken on something crazy again this year? Because you usually do.
Yes. So the kids set their New Year's resolutions. I set mine. But one thing I did do, so the next 3 months, we're really going to talk about health and wellness and your financial health. And we're going to have some doctors come in and we'll do some interviews, which is going to be a lot of fun this quarter. But to back that up, I am very in front of my health. And, you know, when you're getting close to 50, I'm not quite that close, but close enough for me to say, hey, it's time to do some checkups. Things don't heal as fast as they used to. I heard your DNA, goes downhill and the recovery time takes longer. I'm like, that is not acceptable. I can't do that. And so I started looking up some information, and through many people that have already done it, I went to Orlando to a place called Fountain Life. And so I did that in December so that I could really set off my 2025 with these New Year resolutions, because Fountain Life is going to find anything and everything that's wrong with me, health-wise, right?
Okay.
It is the scalpel to digging into your health, right? And so I did a 4.5-hour scan, brain scan, body scan. I mean, I was in a CAT scan, MRI. People were like, wow, you haven't moved. You're doing good. I fell asleep on them. Every test, a swab test, my eyeball retina test. I mean, I could not believe, because you can't just go to a doctor's office and do this, and you don't want to hop around and try to do this on your own. So I bought into it. And so actually my review comes up in a couple of days. So we'll see what it's all about. Right. But it tests for like 50 cancers. Could I have a stroke or heart attack in the next 12 months? I mean, I am telling you, genotype testing, it is amazing. So I'm excited to see what comes of it. But what I'm going to learn from it is if there's anything missing in my health, I'm going to add it and fix it and apply it as a New Year's resolution in case I'm not doing it, right? And so that's one of my New Year's resolutions. There's a couple others, but when it comes to my health check, it's important because I have a lot of mouths to feed. I have a big job this year as chair of the CEP here locally, and I just want to make sure I am ready to tackle anything that comes my way.
Well, it's so many correlations. We talk about it all the time between your health and your financial health. And I mean, what you just did, some people would be afraid of that. I don't want to know that information. If there's something bad out there, I'll just deal with it when it comes. I don't want to know ahead of time. But financially speaking, some people are kind of got their head in the sand with their finances as well. They need to have that kind of deep dive into what's going on. And that's kind of what you do every day.
It is. So while you guys are creating these New Year resolutions, and I know you're all working out and saying, I'm going to be fit and we're going to do the 75 hard, or you're going to do whatever's out there this year, you also want to make sure you have a wealth check, because wealth is important But if you don't have your health, what's the point?
Yeah,
right?
exactly right.
And so have a wealth check is incredibly, incredibly important, Randy. And, and there's a few things you have to consider when you're coming in and doing wealth checks with us. We're going to assess your current condition. Are you getting ready to retire? Are you already retired? What are your fixed incomes? Do you have any debt? What have you saved? What are you worried about? What do you want to do? Right. And then, number two, we want to set some clear goals. Because if you're not retired yet and you want to, we're going to show you how to. And if you're in retirement, it might be just creating a bucket list plan or what am I going to do plan in retirement. So there's a lot of goals you're always setting pre and post retirement, and building healthy habits to me is very important because we create healthy habits and, environmentally, holistically in our personal lives at the beginning of the year, and teaching and coaching you all your wealth habits. And hey, if you're trying to save some more money, don't go spend it on Starbucks every day, or right. Or if you're retired, some of those healthy habits is getting out and going to the gym, going and volunteering, investment wise, making good decisions, being diversified, being balanced, and teaching you how that works.
Well, this is a brand new year, and a lot of people want to start a new year with a brand new attitude. And this is also a time of year when we start thinking about financial things, because taxes are just around the corner. This is the month where you're going to go out and buy TurboTax and start getting your stuff together, and the 1099s and the W-2s, all that kind of stuff is starting to start coming in. And so you're thinking about this, so why not have a retirement checkup along the way as well? So make that appointment as well. If you're making an appointment with your doctor and you're going to do all that, well, make an appointment with Charisse as well, and let's get a wellness check on you. And that, of course, we always say 833-368-3680 is our number. Best way to do this, and what most people do, is they just go to our website, zinniawealth.com, ZINNIA wealth.com, and there's a big gold button there. It says complimentary retirement consultation. If you click on that, we'll get a date on the calendar, and let's sit down and talk through this. And we want to make sure that everybody knows that this is not a difficult meeting. This is not extreme here, okay? This is easy stuff, all right?
You're not going to sit with me for 4.5 hours where I test you on mathematical and financial planning stuff.
That's not going to happen. But I will say this, Charisse, in her own life, with her own health and her own way she goes about things, every now and then does a few things that I think are kind of extreme. The cold plunging, I've never really understood. The other thing that you told me you just did was 80 hours with no food.
Oh my gosh, Randy. I don't know if I should be excited or embarrassed to announce this on radio. No, we're going to talk about
80 hours?
Okay. Let me explain myself.
Okay. All right.
So, anybody out there who's ever fasted, right? And there's a lot of us Christians out there that have done that, and non-Christians out there that still do that for cleansing and getting all the toxins out of your body. And I'm going to tell you, if I ever fast, I'll do it for 12 hours, and that's it. And I'm starving, right?
Sure.
The last time I did a 24-hour fast was in college. So that was over 20 years ago. And after a 24-hour fast, I said, no way, Jose, this is so ridiculous. This cannot be healthy for you. Well, I have grown up and I've learned some things about fasting and what it does for your body. And I got to tell you, I did an 80-hour fast, and I only ate because I said, if I don't eat, I could fall out, or my hair is going to come out, because I wasn't sure. So I heard of the 24-hour fast, the 48-hour fast, the 72-hour fast. And my nephew, Dr. Taylor, did a 72-hour fast, and he told me how great he felt. And then my sister, I think she did the 36-hour fast, and I've had buddies. You're somebody in your area of the woods, Randy, that's done them. And I'm like, okay, so I need to look it up. Anyways, I'm going to tell you, they all said, well, how did the first 24 hours go? I was like, I had some chicken broth for dinner with salt, and it was delicious. And then like the next 48 hours, I'm like, I did bone broth for dinner with salt, and my kids were baking. And then they said the next day, I was like, I was hungry at 3:00 that very next day. It went away after a half hour, went home, had my chicken broth. You're drinking Element and hydrating all day long too, and you're having your coffee in the morning, so it's not like we're not doing anything. But the chicken broth and bone broth saved me, and I was so satisfied. And then the next morning, I went, okay, I'm at 80 hours. I said, you know what? I think I'm good. I wasn't even hungry. I said, I'm going to do it, but I'm going to tell you this much. Everybody listen in here. I never thought I would say this, but after 80 hours of not eating, I realized what a junk food, out of control, spiral eater I am. My body went 80 hours and I had more energy than I've ever had in my entire life. And I can sit here and brag about it. And I was like, wow. And by the way, just for compliance purposes, I don't want anybody getting hurt. Do not do what I just did unless you do your homework. You talk to your doctors. Okay. And I feel great. So I'm going to keep moving forward. I had 2 eggs for breakfast. And then I had a little cheeseburger with no bun. I'm gonna stay away from all the processed stuff and all the canola oil stuff, and try to really clean it up. My mind, body, and spirit needs to be, rock steady this year. And I need to get back on the wagon. It's been like 18 months, Randy.
Okay, all right. Well,
I know, crazy. I know, I'm not insane. It's just it was something I did for the first time. It was great.
This Midwest boy who eats nothing but meat, cheese, and potatoes is not relating here. So.
Yeah, you'll never do it, Randy. I already know. Never say never, though.
Oh, my gosh. Okay, well, let's do this. It is a brand new year. This is our first show of the brand new year, and we're all talking about getting on board with our financial health, with our physical health. But one of the things that everybody wants to know is what's going to happen in 2025 with the stock market financially. Where do I put my money? So what we're going to do, take a break. We're going to dive into a little bit of look back, a little bit of look forward, and see what Charisse has to say, because we've had a pretty good year financially in the stock market. Let's see what 2025 brings. We'll do that coming up next on Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, zinniawealth.com, ZINNIA wealth.com. When you go to our website, there's a button there that says complimentary retirement consultation. If it's time to talk about your retirement, even if you have another financial advisor and you put something together years ago and you wonder, is this still working? Should I still follow this plan? Charisse will give you a second opinion on that at no charge. There's no charge for sitting down with Charisse for that original meeting and sitting down and really talking about your questions about retirement. So get that on the calendar real soon. 833-368-3680 or again online, zinniawealth.com. All right, Charisse, so when we look back at 2024, I think we're going to say it was a pretty good year. I mean, the election kind of dominated the headlines, but financially speaking, another back-to-back, 23, 24, both pretty good years, weren't they?
They were amazing. I'm so excited to see our clients' returns. I was over the moon, and so are they, because there was a lot of ups and downs and a lot of changing, right? Mm-hmm. A lot of unknowns. So there's a lot of hope floating right now. There's a lot of movement behind the scenes, even though, markets look good. Things behind the scenes are still not as great as we'd like it. But again, with big change, slowly but surely here over the next 12 months, maybe that could change the trajectory of what's going on.
Well, one of the things that drove the news is certainly the Fed and the interest rates. So we had a shift in 2024. They went from raising interest rates to starting to lower interest rates. At the beginning of the year, inflation was at 3.1%. Now we're down to 2.7%. So it's moving the right direction. The Fed still wants it at 2%. They just recently lowered the interest rate again in December, just a couple weeks ago, and that made the market kind of roil a little bit because Jerome Powell kind of said, you know what, we're going to slow down on this. We're not going to be as aggressive as what we thought in 2025, and the market kind of didn't like that. So what do you see? Are we going to find that Goldilocks interest rate where everybody's happy, the Fed is happy, Wall Street's happy, retirees are happy? Can we find that? Or are we going to have a year of, the Fed is doing their thing and they're stimulating the economy and we don't need any more stimulus? I mean, there's a lot of things at play here.
There are. So I will tell you, people won't like the fixed rate world as much, right? Interest rates go down. You can already see now you don't want to renew your CDs at the bank. So now people are bringing their bank money back to us and saying, all right, Charisse and his team Zinnia, what do you got? So we have lots of great alternatives out there. Like, we're still loving our 1-year notes as that CD alternative. It's fantastic. So people are concerned that they're not going to make the money in in those cash equivalents like they could before, money markets and CDs, which is true. That's typical when interest rates go down, especially at the bank. So I think people are going to not be as happy about that, especially the retirees, because they love that safe money that's accessible and it's cash. They can get in 6 months to a year. And so they are starting to get worried about that area.
But Sharice, you and I have talked about this. If we were to be having this discussion 2 or 3 years ago, and you were to say, look at somebody and say, I've got a 3% or a 4% CD for you, they would jump at that, going, because rates for so long were so low and they weren't doing anything.
Oh my gosh.
We are still in a pretty good interest rate environment.
That's such a good point. We are so spoiled.
Yeah.
We are spoiled human beings because when the getting is good, we forget how it wasn't so good just 12 months before that.
Great
We forget
point.
those things.
Yep.
And yeah, I mean, you go back 3 and 4 years ago, we had Squatski for interest rates and CDs, and then they came around. They're great. So we're kind of going to be going back into the old school territory there, but still good. You know, what you think about is inflation. People are like, well, if the CD only makes 3%, inflation's 2.5, I made 0.5% technically. I mean, that's what people are thinking. And so they're looking at other alternatives out there that are offering, you know, maybe 5 or 6 or 7 or something more than that. And so we've got some great planning tools and resources for people who need some safe money and alternatives that, you know, can potentially pay a higher rate of return, right?
Well, it's nice to have a choice. You know,
It
I mean,
is. You do have a choice,
yeah.
and people don't know that.
Yeah. And so when we look at the market at the beginning, at this point last year, we were around 37,000 on the Dow. Now we're right around 42,000, 43,000, right in that as we record this. And so we did have a good year. It's definitely an up year. And I dove into it a little bit because you and I have talked about when the market goes up 20-some% in 1 year, followed by another year of 20-some% growth. Do you have a third year of 20-some% growth? And I can find stats that say yes. I can find stats that say no. I can find stats that say level. So, I mean, market history now is really hard to gauge, isn't it? I mean, with what we are dealing with now, it's just not the same market as 20, 30 years ago.
It's not, and it's interesting. I'm on the Cogent Bank board, and I was talking to all the business owners, and they're just telling me how great things are behind the scenes, from metal sheet to construction to you name it. And so locally, we're hearing some really positive things internally with the infrastructure and growth and building. So that's fantastic. And the other thing is, nationally, though, there's other departments that aren't doing or weathering so well.
So let me jump in there, Sharice. That is the question that I have people say, where do I put my money? And what you kind of stumbled on there is this. We have focused so much in the area of tech over the last couple of years because tech, NVIDIA and Microsoft and Apple and, you know, all of that has pushed the market up. That's cooled off a little bit. But in any administration, I mean, what we have coming up in 2025, I don't know. Are you having a discussion with people saying, you know, with all this tariff talk, maybe we shouldn't be in international stocks, or with drill, baby, drill, maybe we should go to energy stocks? Are you hearing that kind of thing? Because that kind of goes along with what's coming out of the White House and where we probably should be looking at putting our money.
Yeah, we are having those conversations, and our portfolios are kind of built to weather those changes, which is a beautiful thing. Mm-hmm. So if you have our day trading portfolio, it's based on, you know, what's going on in our environment. If you have our quarterly trading portfolio that's just based on stocks and sectors, it's going to develop and move around based on all that noise as well. Mm-hmm. And we're having those conversations with clients because maybe tech isn't the best. I mean, tech is always great. You know, it's always going to be here. It's always going to grow. But are there other avenues that we could dive into that could have more consistent returns, maybe more conservative returns, depending if you're a risk taker or not, right? So these conversations can really change and go one way versus the other. Because a lot of people, Randy, when they walk into my office, they're not saying, Sharice, give me the jiggliest thing you got.
Right.
People just want to be told, hey, what do I need to do, Sharice? How do we do it? And how do we do it without paying you as many fees, right? and they just want to know they're taken care of. They want to see something done. One thing I've learned about the human beings in our world, and including me, we just want to see something done. We want to have confidence in our plan. We want to have confidence in the person we're working with, whether it's a CPA, an attorney, your financial advisor, and you know that they got you and they got your back, and you know, and you can see them actually working behind the scenes because you get emails, you get, videos, you see money management happening and moving when times are in the weeds and when times are not, when it comes to the market ups and downs, right? And if it's sideways, taking those actions when it's sideways, which should we invest in that is actually making a little bit of money? So there's some forethought, and people just want that confidence, Randy.
I think that what you're talking about there is value. And that is, we all think that when I sit down with a financial advisor, most of the subject matter is all going to be about investments, but that's not always the case. Certainly, we're talking about investments today. Where do you put your money? But at the same time, you need to have tax advice. You need to have estate planning advice. You need to have advice on Social Security and Medicare. There are so many topics that we deal with, and that's really where the value comes in, and that's what we talk about here regularly on Retirement Coffee Talk. It's not just investments. It's all about the whole retirement picture. Give us a call, and we'll try to make that picture a little clearer for you. Here's our number. Here's our website. Sit down. Let's have an appointment in 2025 and start to map out and have a discussion about your retirement. 833-368-3680, 833-368-3680, or ZinniaWealth.com, ZINNIA Wealth.com. There's a gold box there. It says complimentary retirement consultation. Just click on that and you'll be on your way. Another part of 2025 that I find interesting is this whole demographic thing. Baby boomers are certainly getting older and moving toward retirement. Many of them are already in retirement, but over the next 3 years, there will be 4 million people every year that will retire. There are 11,000 people per day who are turning 65. And not all of them are walking away from work yet, but I will tell you this, as one of those people, we are all wondering where our next paycheck is coming from. We all want to know, when I walk away from the 9 to 5, how am I getting paid? And this is one of the reasons that we talk about this fixed income area and why for the 16th quarter in a row, annuity sales are way up. Everybody wants income. Now, Sharice, we've got about 4 minutes left, 3-4 minutes left in this segment. I know when we talk about annuities, we talk about them as a alternative, as a tool in the tool shed. This is one of the ways, along with Social Security and CDs and dividend-paying stocks, it's just one of the tools in the tool shed. What is it about the annuity that you see is breaking records over the last 4 years?
Yeah, I'll tell you, the rate of returns that the insurance companies are offering just the individual investor is the highest I have ever seen in the history of our planet. Yeah. And I never thought I would see it, but the returns that our clients are receiving are amazing. And they're coming in on their reviews year over year, the last few years. They're like, Sharice, I didn't know I can make this much money. I'm like, well, I just want you to trust me. It's a good time to do it. As in 5 years, maybe it's not, but right now it is. And so you get in when getting's good. And then when it's not good, then you just don't get in. Right. And so we're just seeing it being like the superhero part of the portfolio. And there's thousands of companies, Randy. And of the 1,000, I pick, in my opinion, what are the top 3. And those top 3 keep on giving and giving and giving to our clients. I wish I could tell you about a few of our returns we have, but I'm not allowed to do that on radio. But it blew me away. And so it's not your grandfather's and grandmother's retirement. It's not your mom and dad's retirement. Times are changing and you have to adapt to the changes. So with 11,000 people turning 65 every day, Randy, you said from 2025 to 2027, that is amazing. It means I'm in the right business. The plastic surgeon is too. I'm the heart surgeon, right?
And the orthopedist for pickleball.
Oh, yeah, no doubt. We help people with Medicare and all the different plans, but we also help with the income plans, the investment investment plans. We talk about annuities. I had a couple of clients who I sat down with and I said, hey, these annuities aren't right for you because of this, that, and that. And then some people sit down with me. I'm like, oh yeah, this is a perfect fit. And it depends. Are you a risk taker? Are you a conservative person? But I look at that annuity, the growth annuity. We're not talking about an income annuity. Get the bad annuities out of your minds. Get that old school conversation of why annuities are bad, because they are not. But there are 4 annuities, and of the 4 annuities, we only offer the one, and it happens to be my superhero in our portfolios. And so sometimes we'll put a 4th year investment into it if you want it. If you don't, that's okay. I'll put you in a bond portfolio. Good luck with that. For safety, CDs and money markets aren't going to be the winners anymore. So you have to start thinking outside the box and just know there's a reason why they have had the number 1 sales over the last 3 years than we've ever seen in history.
Everybody wants that paycheck in retirement. That's one of the ways to look at it. It's worth part of the conversation. To have that conversation of what your retirement paycheck looks like, how is it going to be developed? What is it going to be that you've saved all these years in this 401k and other places? What does that mean for you in retirement? Let's do the math on that, and let's get that done, because now you can start to build your life when you know what's coming in. Let's show you that number. 833-368-3680. Again, 833-368-3680 or zinniawealth.com. Hit that box that says complimentary retirement consultation. We're going to take a break, and when we come back, let's talk more about your 401k, the idea of a conversion. You take that 401k money and you move it over to a Roth, pay the taxes a little bit at a time. Are you a good candidate? Let's talk through it. Coming up next on Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, find us at zinniawealth.com. Also, our podcast is out there for you as well. It's on our website. It's also out there on your favorite platform like Spotify and iTunes. All you have to do is look up Retirement Coffee Talk. So if you're listening to the show, you got to get out of your car. That's okay. It's all there for you in some segments, a lot of different topics, and in full show form as well. Just look up Retirement Coffee Talk. All right, so with all these people wondering about retirement and going into retirement, a lot of them are going to come in with a 401k. And then when you start doing the math, you look at them and say, we've got a tax problem, because when you get to be 73, or maybe in some people 75, you're going to have to start taking money out of that 401k, and now you're going to have to write checks to the government. So we've heard of this, Sharice. One of the upside is we're going to get out of the tax wash. That's a good thing. That means that when you're in retirement and you take money out, you don't have to pay taxes on it anymore, because that's all done. The downside is when you're doing it, it could affect your Medicare premiums, your Social Security. There's a downside as well. So talk to me about how you do the math on Roth conversions.
Yes. So I used to just use a calculator. It's pretty good at it, right? And now we're more sophisticated. Okay. So we do have tax planning software. We will not do your accounting and your bookkeeping, but where the CPAs fall short because there's no enough time in the day, we take over from that point. So they do your accounting and bookkeeping, and we do the tax plan. And the tax plan includes tax loss harvesting on your brokerage accounts to be able to sell some winners and some losers and hopefully pay zero taxes. IRA conversion strategies where you're rolling your IRAs and 401ks to your Roths. And these tax plans, we build them out on our software. So nobody has the software like we do. It is the most simplistic thing you're ever going to see. And I'm going to tell you, we have people coming in over and over and over again the last quarter of 2024, and they went, Sharice, now show me what you got, because you've been bragging about your software. And I've worked with different advisors, different CPAs. Nobody could show me the future of taxes and show me why I should convert an IRA to a Roth. I even had two people say, I've been to 2 classes where they taught taxes, but they still never gave me the answer. And I said, okay. So on the second appointment, after we get your tax return on your first appointment, we were going to run this analogy and also an exact plan based on today's taxes. I can't do future taxes because they're still figuring that part out. But on today's taxes, if you're not worried about taxes going up, we're going to show you in one column, if you do nothing, this is the taxes to you. If taxes don't go down and stay right where they're at right now. and then to your heirs, to the people who are going to get your money after you pass away. And then we're going to show you the other column that's going to show you, okay, if you do this conversion and you do this for so many years, here are your taxes and here are the taxes to your heirs. I will tell you 9 out of 10 times, it is a no-brainer. And people are like, is that simple? I said, it's that simple. And I'm like, do you want to go into the weeds? And some people want to go into the weeds and say, okay, what do I have left that I've got to pay taxes on? And where is it coming from? How do I pay this tax when I convert these IRAs over to the Roth? So we really line that up for you for the first time. I have not met anybody that have been able to do it the way that we do it. And it's so important to consider it now. We have taxes on our side. Maybe it's only going to be for 4 to 6 years, who knows? But while taxes are still on sale, we want to make sure that we're making these moves and we're thinking about the future, because we have a lot of debt, and I have a lot of hope that our debt does go down and we're not in a deficit forever. And we have a surplus. I mean, look what happened in Argentina. And that was a big change. And so there's hope. But until we know for sure, until we start seeing what happens the next couple of years, I would start considering rolling IRAs to a Roth, because we were talking about this 10 years ago and 5 years ago, and people didn't want to do it. And all of a sudden, the last 18 months, people were like, oh gosh, why didn't we do this? I'm like, we talked about it. You didn't want to do it. You didn't want to pay the tax bill. And now I have people like by the droves. I've got clients like rolling $200,000 a year for the next 5 years out of their 401ks and
Which
IRAs.
is expensive, because that all gets put onto your income, doesn't it?
It does, because a lot of them are over 65. And the other hazard you have to be careful of when you roll an IRA or 401k over to a Roth IRA, there's some income provisions when you are on Medicare. So, your Medicare Part B, is over $175 a month. And if you roll too much, that Part B premium could go to $250 a month, and it can go to $350 a month for you and your spouse if you're both on Medicare. But if Medicare does a 2-year look back. And so you won't see that right now. You see it in 2 years, and it's only for 12 months. Then if you roll again, then you'll continue to have that higher rate. But even when I do the math and we do the rollover and we look at the nuts and bolts, even though Medicare goes up, it's still the better deal.
Okay.
It's still the better deal.
Yeah.
And if taxes go down and they stay down for the next 30 years, then it was a dumb idea. Sorry, guys, I got it wrong. But I'm hedging against, I'm not so sure. And if they stay right where they're at, it was a good move, because you're leaving a tax-free legacy to the surviving spouse, because there's that widow's penalty and widower's penalty that when somebody passes away, your tax bill goes up. I will show you the math on that. People are like, what? How's that possible? I got
Head
less
of household,
income. Yeah. And then when the second spouse passes, and you got the kiddos penalty, and now the kiddos get stuck with this huge tax bill, right? And they inherit this money, and they got to cash these IRAs out over 10 years, which just started a couple of years ago. That was never the case before. So a lot of people, this is still foreign. They're like, what do you mean the kids got to cash this out over 10 years? I got an IRA from my parents, and I've been just taking a little percentage of it for the last 10 years and 20 years and forever until I pass away. Well, rules have changed. Laws like to make changes and get us in the long run, the people who save the most amount of money. So we want to protect from those heirs and your beneficiaries from having to cash it out over 10 years. Well, they can delay it and leave it for their legacy for a lot longer, because when you have a Roth IRA, well, guess what? It's all tax-free to your kids. And yes, your kids have to cash it out over 10 years, but they're not going to pay a dime in taxes. They might reinvest it into something like a brokerage account that's taxable, but we'll worry about that down the road.
Well, it is the number one reason that people have come to financial advisors in 2024. Tell me about Roth conversions. So you don't want to be in the position, I mean, this is so real to me, and I've said this so many times. My father-in-law, when he got into his 70s, was just complaining all the time about the checks that he had to write to the IRS. He goes, I'm in retirement. I'm writing a $30,000 check to Uncle Sam. What is this? And it's because he had so much 401k money. Every time you take money out, it's like going through a toll booth. You got to pay the taxes. So if you wanted to buy a car and you're 72 years old or 75 years old, you know you're going to need a car. And so instead of taking $40,000 out of your account, you have to take $48,000 out of your account. If you did the conversions, you wouldn't have to do that. So it's really an important consideration and something we should be talking about.
Well, and don't forget your RMDs. Everyone, if you have a retirement account with your employer, you have to, and you are forced to tap into it at age 73. Those are the rules now. If you're born after 1960 at age 75, those RMDs, required minimum distributions, you have to pull out of those accounts. You have to do that for the rest of your life. And it starts, let's keep simple numbers, about 3.65%. But every year we get a little bit older, that percentage goes up. It never goes away. By the time you're in your 80s, late 80s, you're having to pull 8% a year, pay the tax bill on it. Can you imagine being 85 years old and you're like having to pull almost 9% out of your IRAs? And you're thinking, I don't even need this money. And now I got to pay Uncle Sam this money. And maybe taxes are higher, or if somebody's passed away, now taxes are for sure higher because you're filing singly, not joint. And so we want to kind of run and hide from those future problems by planning now. And so that's just some of the tax stuff that we do. We also do donor advised funds for people who are like, Cherise, I'm doing the standard deduction. I need more write-offs, or I want to gift my stocks. And you can, write off 60% of your gross income when you donate to a donor advised fund, which is a whole nother topic we're going to have one day here soon. And people are selling their businesses. It's a great place to park money if you're looking at gifting in the future. Remember, you have to be wanting to gift your stuff in the future to charities and or tithe, et cetera, to make that work. And there's so many other things. You're selling your businesses. You're selling big properties, and you have to write a $500,000 check or higher to the government. Well, we have another tax strategy for you so you don't have to do that. And they're quite amazing, and our clients adore them. And it's just another tax efficient strategy to keep more money in your pocket and passed on to your beneficiary. So there's a lot of tax moving around here at our office, and we are really up in front of it. And whether you have IRAs and you have to take an RMD, whether you're trying to roll an IRA to a Roth, whether you need tax loss harvesting on your brokerage accounts, whether you are selling properties or businesses, we have a tax strategy for you, and we're proud of it.
You know what's ironic about RMDs is everybody wants to know how much money should I take out of my accounts in retirement, and we got to come to a number there, right? Mm-hmm. So a lot of times you'll look that up online and it'll say the 4% rule, and we've beat that up a lot here on the show. But
Sure.
the rule is, as long as the market's going up in some way, shape, or fashion, if you take 4% of your money, basically you won't run out of money in your retirement. But when you get to RMDs, Uncle Sam is literally telling you to break the 4% rule. He's telling you to take 4.5%, 5%, 6%, 7%, and you're going, hey, Uncle Sam, you're breaking the 4% rule. But that's the rule. That's the laws, okay?
Yeah.
So it's a weird position that you're put into in your retirement years when you have to start taking your RMDs. Let's have a plan for that. We do the math on retirements like that all the time. Let's find a way around it. Give us a call. 833-368-3680. 833-368-3680. Get a date on a calendar with Cherise, or use her website. That's really easy too. ZinniaWealth.com, ZINNIA Wealth.com. And there's a gold box. It says complimentary retirement consultation. Click on that. We'll ask you to put in a little information there, and our team will reach out to you. In 2024, the number one search about financial advisors in Google was this. Hey, Google, find a financial advisor near me.
Really?
Okay. So this is the number one qualification that your financial advisor is just near you? I mean, there's got to be more than that, Cherise. There must be more.
That's scary, actually.
Okay? Because, I mean, you do business with people all over the country. I mean,
Yes.
with Zoom now, with Teams, with all of these different ways that we can be in touch with each other. I mean, I want to be able to meet my financial advisor face to face. I want to be able to have that meeting. But on the other hand, just having somebody down the road from me should not be my number one qualification. What should be, Cherise, if somebody in 2025 is saying, okay, this is the year I'm going to sit down with somebody, what should they be looking for?
Yes. So, it depends if the season of life that you're in, if you're 40 years old, if you're 50 years old, if you're 60 years old, or if you're 70 years old. When you're younger, You can set it and forget it the majority of time. Keep fees really, really low. Maybe consult an advisor once every couple of years on taxes. Pay a small little fee for that. But as you're getting closer to retirement, Googling the financial advisor nearest me is probably not the best plan, but it is the easiest way to find those people closest to you. But not all financial advisors are created equal. So when you do that, here is some a checklist to follow to also ask Google. I would Google, who is the closest fiduciary near me?
Okay.
I would Google, who does holistic planning. I would Google, who does retirement planning. And I would dig in and I'd get it narrowed down. I would look at who does income planning and tax planning. So I would Google those things as well. And I would also Google wealth managers. Who's my closest wealth manager? Because usually those wealth managers by default are fiduciaries. And the wealth managers tend to do a little bit more of a holistic plan where they will monitor your Medicare, your Social Security, your income plan, your tax plan, like what we do, estate planning, all the above, and handle all that for you under one roof, right? So that's what I would recommend versus just Googling the financial advisor near me, because that's pretty basic. That's not prudent. You're not digging in enough. And a lot of times, the other thing I recommend is that when you do it, if you don't have time to see 3 advisors, see 2 and narrow it down to 2. I prefer 3 because you're going to sit down with 3 and they all could be the same. And I hope not. That means that's not a good sign. But there should be 2 that are similar and there's always going to be 1 that's different. And do that gut check and the one that works best for you. Let the best gladiator win. I always say everyone's open for business. Hopefully they're doing a good job, and go with the one that makes the most sense to you. So check out the different advisory firms and brokerage firms. I'm a fan, and people come in and see us, Randy. I tell them, like, okay, I know you love us. Go interview one more because I want you to be sure you're sure. Because we don't want people leaving us in a couple of years. We work hard to bring people on and have that customer service and bring that experience to their lives. And we want them to understand what we do and love it too, and thoroughly trust us when they come on board.
Well, I always bring up the example of my lawn service because, when you hire somebody to mow your lawn, you're probably wanting them to do more than just mow your lawn. And my guy does the bushes, and he does the fertilizer, he does the weed killer, he does the blowing of the leaves in the fall, he does all these different things. So I'm getting a lot for my money. You should feel the same way about your retirement planning. You should get a lot for your money and not just investment advice. There should be tax advice. There should be income planning. There should be tax planning. There should be healthcare planning, all under the umbrella of retirement planning. Give us a call at Zinnia Wealth. Let us show you how we do it at Zinnia Wealth. ZINNIA Wealth.com. ZinniaWealth.com is our website. Go there, tool around a little bit, and see the gold box there. It says complimentary retirement consultation. It's really a meeting to find out what questions you have, what your goals are, what you're bringing to the table. How can we help? Are there any gaps that we need to fill? 833-368-3680. 833-368-3680. So there are a lot of people that try to do retirement planning on their own. We don't recommend that, but we have a list of things that people, when they do these things on their own, what do they usually miss? Okay, you DIYers, pay attention. That's coming up next on Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, you can find us, ZinniaWealth.com. We hope that you do. If you're listening to the show here, you like what you hear, you want to hear a little bit more, want to hear the whole show, we've got it all on our podcast so you can listen on your time whenever you want. And that is at iTunes and Spotify. You can look up Retirement Coffee Talk, or use our website too. There's a tab there that says Media, and when you click on that, all our shows are there, and you can kind of scroll through what's interesting to you. All right, we want you to have help with your retirement planning. That's why Sharice is here. That's why we do this show. But we also know that there's a lot of people that try to do this on their own. So I've got a story here about the top 5 things, and this comes actually from financial advisors. When people kind of give up and say, okay, check my work. Am I doing this this right, and I know that you get a lot of people that come in and say the very same thing. This is what advisors say people forget. Okay, here's the 5 things. Number 1, they don't think about inflation. Number 2, they don't think about how long they might live. They think, oh, I'll never live that long.
True.
Okay. They don't think about how much health care is going to cost. They go, I'm on Medicare, I'm fine. No. And they don't think about what their income is going to be, and they need rising income in retirement. And the last one is they overestimate their investment returns. They think, well, I got 20% last year. Isn't that an every year thing? No, it's not. So, Charisse, talk to me about this.
That's a good one.
Is this a good list that you see here, or are there more that you see? Talk to me about this.
You know what? Let's keep it simple. This is a great list.
Okay.
Thanks for bringing this up.
All right.
There's some funnies down there. So the first one was the impact of inflation. So, 1 out of 5 people across the country have an income plan. 1 out of 5. Wow. That means 1 out of 5 of you who are listening today know how much income you're going to need in 10 years, right? Your grocery bills are going to be 10 grand in 10 years. It's going to be 14 grand or 15 grand, right? And so do you have enough money saved to keep up with inflation? And do you have an income adjustable inflation plan in your total plan? And only 1 out of 5 people. That is a huge number. So we are trying to get it to 3 out of 5 people, at least in our community, and hopefully 5 out of 5, because we want to show you these income plans, because you need to see it before you retire. And if you are retired, we got to figure out a plan to make sure that we can make that adjustable every year, right? The iPhones, my gosh, they're expensive. And retirees want the new iPhone just as much as the young people do. I mean, they're keeping up with all this stuff. So inflation protection plan. Number 2, how long will you live? And I do nothing but chuckle at all of you who come in and say, I won't make it to 80. I'm like, yeah, you are, right? And I'm going to ask you, is mom and pops alive? Yeah, they're alive. Oh, really? You're not going to live to 80, but mom and pops are alive? Oh, I'm just not as healthy. I'm telling you, they're kicking you out of the hospitals quicker and sicker, and they're having every new medication and surgery out there for you over the next 5 to 10 years. You can count on living a little bit longer, in my opinion. And those questions are important that we ask everyone who walks in. How long did grandma and grandpa live, right? And if you got somebody who lived 100 in your family, we probably need to run your income plan to 90 years old at least, right? So those are the kind of conversations we have to have. We build the income plan based on that. So some of you are like, I'm going to live to 80. I'm going to run a plan to 90. Some of you say, I'm going to live to 90. Yet we had grandma and grandpa live to 100. I'm going to run it to 100, right? Got it. And because I think people are going to be living longer than ever. So we want to make sure they don't underestimate life expectancy, right?
Okay.
Number 3, the cost of health care. So yes, you retire, you are 65 now, and you have that thing called Medicare, that red, white, and blue card that you have waited your entire life for this big savings event. And it is a big savings event. Trust me. If you're paying $800 to $1,000 at an employer group, or you had individual insurance, you're going to love Medicare, right? I love Medicare. But that's not the only part of healthcare, right? There's prescription drugs. There's deductibles. It's copays. Those aren't so much of a big deal to me. But healthcare in general, what if we need home healthcare? What if we need long-term care? What if a spouse passes away and the second spouse needs long-term care? Do we have a plan to call the kiddos to take care of us? Do you even want that to happen? What is the plan? Because the average cost, Randy, for retirees, when it comes to healthcare, they say like $280,000.
Oh, at least.
Yeah. So we got to have a plan for that. Like, where's that bucket? So we address that bucket when we're talking about income planning and inflation planning. It's very important. Like, where do those dollars come from? Let's make sure that's good to go. Now, number 4, what your retirement income will be. So what are the paychecks? What is your retirement income going to look like? Okay, we're going to get Social Security. Of course, most people do. Do you get a pension? Okay, you do. This couple over here does not. The people who have pensions, you made my job really easy, right? And then we're just doing a little light lifting, and we don't have to do a whole lot of heavy lifting on the actual investment plan. But the people who don't have a pension, do we need to create you a private pension? Do we want to make sure those fixed bills are always covered, even if a spouse passes, and add in that income? And then do we add in other income streams? Because when we talk about inflation protection, in 5 years, we're going to click on another stream of income. And 5 years from there, inflation's hitting us again, right? We're going to click on another inflation check. And so making sure that those checks arrive when they're supposed to arrive and creating a plan built out for that. I think that's our clients' favorite part of what we do because they can see the picture like, okay, so I'll turn that on then. Okay, great. Okay, well, Sharice, I want to, based on what you said, let's front load retirement and these go-go years, let's spend more now and then we'll turn off that check. I'm like, okay, let's do that. I like that idea. So we're coaching people up and we're very interactive so that income plan is crucial and having different checks come in at different times. Number 5, your investment returns. Now, Randy, you said people overestimate their investment returns.
Hey, last 2 years we've had over 20%. Isn't that going to happen every year?
I know. That is the truest thing I've ever heard because we forget what once was and what could happen, right? And it's not too often we get 2 years back-to-back 20%, right? Or 3 years back-to-back 20%. So we want to be pessimistic on our plan and then hope for the best. So let's plan for the worst and then show you, okay, but if the best does happen, this is what it looks like. But can you live off the worst? So we got to have like that in-between balance plan, taking advantage of when markets go up, we make money on all things. When the markets go down, we still make money on some things, but not all things, right? But making sure those checks are there and still available for you to live on without hemorrhaging your accounts and selling when the market's down. That's a big no-no. Making sure you're checking once, you're checking twice, and you're being prudent about what you're doing. And because you know what's going to do is it's going to provide confidence when you're on your trips or visiting family, enjoying life, that the plan is intact. There's going to be some bobbing and weaving, and there's going to be conversations as things approach us.
Well, there is one thing that you can do to avoid all this, and that's sit down with Sharice and let her go through it for you, because that's what she does every day. Give us a call, and let's go through your list. It's 833-368-3680. 833-368-3680 or online, ZinniaWealth.com, ZINNIA Wealth.com. Hit the button that says complimentary retirement consultation. Well, there it is, our first show for 2025, and I'm going to give you the last word.
Wow, this went by quickly. Goodness,
Very quick.
I guess I was excited to get back on radio. Well, Happy New Year, everyone. I hope you all stick to those New Year resolutions. And hey, we're going to have some doctors come in and talk about health and wealth with us. So we're excited about that. And as usual, if you need to do a rewind, we talked a lot about your health and wealth today and the financial checklist for the new year. Do the rewind on our podcast on your Apple phones and or Spotify, iTunes, YouTube, you name it. We're about everywhere. And as usual, live by design and not by default. And we'll see you here next week.
This has been Retirement Coffee Talk. To find out more about how the strategies we've discussed on this program can build the retirement you've been wanting, call Zinnia Wealth at 352-368-3680 or visit us online at ZinniaWealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations recommendations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and/or categories usually do not deduct transaction and/or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.